out there, but we're still up nicely on the week. So with a lot of catalysts coming next week, how would you say we're set up here with the down year we're near a multi-month high?
I think the market's riding on this hope and belief that inflation is rolling over, which I think it is, and that will mean that we're now getting to the tail end of these Fed rate hike cycles, and that after the Fed goes another 50 in December, they're not going to have that many left. So that is creating a lot of relief because we know inflation and interest rate hikes have been the main pain point for the markets this year.
So that's all good and cause for the market rally. On the flip side, increasing concerns about what's happening with the economy. University of Michigan sentiment number out on Wednesday showed a drop from October, a 15% or so drop from November of last year. And so the bears will argue, well, the recession hasn't been priced into earnings and the market at this point. What do you think?
Well, I'm somewhat in that camp. I think that's the sort of the next hill to climb for the markets is what is the economic consequences of such a sharp rise in interest rates? What's the economic consequences of potentially, and I believe, a global recession and what that's going to mean for earnings? But it seems like the market wants to deal with that next year. But it's still going to be a major challenge for markets, and I think that's really the next hurdle to climb and sort of the next leg of the bear market.
And I'll clarify, we're on track for a 7-month closing high for the Dow again, 2.5-month closing high for the S&P if it can squeak out a gain today. Doesn't look like that's happening at the moment.